That was the market setup that we are witnessing right now. But what's the outlook on the market? That's the million-dollar question that we are going to pose to Aveek Mitra. He joins us, of course. He's the founder and chief advisor of Aveksat Financial Advisory. Hi Aveek, thanks so much for making time and speaking with ET now. Let's begin by discussing the market outlook itself, because of late we have seen a solid momentum when it comes to mid-cap, small-cap. Both those indices are up, 30% for the year already. Where do we go from here on? Do you see a bit of a fraudiness coming into the mid-cap and small-cap space?
Frothiness, yes. First of all, thanks, Anisha, for actually inviting me, and it's a pleasure talking to you. And first of all, broad market does not look very stretched, but at the same time, one index we track very regularly, that is a ratio of BSE small cap by Nifty 50. So presently it is quoting at about 1.84, and if we look back, then what we have noticed in previous occasions is that around 1.8 ratio level, this has started going down in 2018. Real frenzy happened in 2008, where it went up to, I think, 2.20. So that is one pointer which actually keeps us a bit cautious about it, about the different pockets of mid and small cap. But overall market looks pretty okay as of now, because after 18 or 19 months of consolidation from 2021, the market has reached about 20,000 and then again come back from there. I think there is every reason to believe that the market will cross this 20,000 barrier, or at least reach up to that place. So sector rotation is important. Caution is important, always important, but I think more important for some areas where I think frenzies are being observed by mostly by retail participation, because the small caps generally are being bought over by the retail clients.
Sure, point taken. You're talking about Nifty reaching that 20,000 mark very soon. But once we hit that, where do we go? I mean, is it going to be the last time that we hit 20,000 and retrace and consolidate? Or after 20,000, perhaps there's 20,500 and higher levels coming?
We have a view that I think over a period there will be a volatility going ahead, because of election is coming, and lot of news flows will come from non-market areas which may affect the market sentiment. But over the long period of time, or I think this will obviously go up. But even on the shorter term, I think we can go up to 21,000, 22,000 levels. So. Because I'm telling you one simple thing is that once the market has consolidated over such a long period of time, this bull market won't stop very easily.
Sure. So after 20,000, there is easily a chance of 21,000, 22,000. But for that to happen a week, there will be the large caps that will need to participate as well, right? Right now, of course, the rally has been led by mid caps. Banking has been one space, especially the private banks, which have done nothing in the last 3 to 4 months. HDFC Bank, ICICI Bank, pull up any of those names. When do we see a momentum coming back to them?
When the momentum will come back is very difficult to tell, but the thing is that I think we are looking into this beaten down pockets actually, as I told earlier also, that there are areas where I feel that there will be sectoral rotation, because the stocks or the sectors which has gone one way will consolidate or come down depending on the quality of the company. But at the same time, the other stocks will come up. Because I think there are another area which is the liquidity. The liquidity for the market is adequate, because the domestic money is coming. And also remember that FII have not really loosened their purse strings very much. So that money is also waiting in the wings. So now all we need to see is that when the Fed rate starts coming down, or when Fed actually pauses, so that creates a big friction for FI money to come in. So that will actually take Nifty forward. And another thing, I think there was some readjustment going on HDFC Bank and HDFC merger and Reliance and these areas. So that has kept the Nifty number a little artificially low. So once that hangovers are gone, so I feel that there will be an upward trend in Nifty. So overall, what I'm saying is that caution is expected or required in the small cap area. But at the same time, overall large market sentiment is uptrending.
Okay, so the large market trend is still on the upside, but of course you have to be caution is needed as always when it comes to the small cap, mid cap space. But a two-part question. One on the private banks, a follow-up. Is there a pecking order that you can talk to us about which stocks you prefer the most? And secondly, what's your view on pharma? Because that too is coming back on investor radar.
uh, I think let us not discuss specific stocks, but I think we feel that there are private banks where they have raised the capital or where they have got a very niche quality clienteles based in the southern part of India is an area where we are looking into. And also we are looking into the pharma sector, but more into the API space where we feel that the capacity will be an important parameter going ahead. If the China plus one policy, these are low hanging fruits of actually reducing the dependence on China or actually broadening the supply base over beyond China. So we are looking into the API capacities across the different verticals, and we are pretty uh, okay about the valuations right now. Also, we are looking into some domestic pharma because I think going ahead, the domestic pharma and pharma related areas like the hospital supplies and things like areas like that will have a long runway ahead. If you look into the FDI investments in the hospital sector, which is actually very high, and that play we can do around the areas of hospital and medicine and pharma.
Okay, fair enough. So that's a take coming in on pharma as well as the banking stocks with the favor or preference coming towards the south, facing banks. So we are watching out for that as well. But apart from that, Aveek, just wanted to get a sense from you on IT as well, because that too is an area where the street is really divided. One part says that it's reasonably priced, but then the other believes that there's a reason for that reasonably priced, given the fact there are a lot of macro headwinds. But do you think that is played out and it's time now to look at it positively?
Look, we are not as negative as the market about the IT. I think some time back I came to a channel or maybe the Hindi channel and I talked about it because the demand is structural on IT, and also a lot of new technologies are coming in, which including AI that also requires an IT support and more digitization and change from many areas of legacy areas to the newer areas to the more industry 2.0 sorry, industry 4.0 and all many other areas where the IT demand will be there. And I think the rupee is also a little weak, so that will also give a immediate kind of support to the downside of the IT stocks. So if you want to keep a portfolio, some kind of a ballast to the portfolio, it is a good area to put some money. And specifically, the companies which are into the mid-cap IT space, there are companies which may have the prices have gone up double, tripled, but also there is some space still there. But at disclosure, we don't have very major IT allocation in our portfolios as on date, but we are looking into it.
I'll
We are
just say
only
that.
having IT in very large portfolios.
Um, okay, Aveek, on that note, we'll let you go. Thank you so much for joining us.